All right, guys, bang, bang. Man, do I have a treat for you guys today. All right, sir. Thank you so much for doing this. Let's do it
You're welcome. Thanks for having me.
for sure. All right, Sahil. So, people who do not know who you are, there's like two people listening who don't know who you are. Let's go through your background and kind of what you did up until Pinterest and Gumroad. Where were you born and kind of how do you get to Pinterest?
Yeah, yeah. That's 18 years. I'll compress into 3 minutes or less. I was born in New York on Long Island to two immigrant parents from India who came to the U.S. for their master's degrees. They both got into finance. My mom was a CPA. My dad became an investment banker. I ended up growing up mostly abroad in Singapore, which is where my parents are still at. Uh, Went to USC for computer science and computer engineering. I had started in high school making iPhone apps. That was sort of the big aha moment for me is when I saw that sort of famous Steve Jobs presentation in 2007. Uh, the internet communications device or whatever he called it at the time, which made it possible for me to basically sell directly to the internet, like just to people I didn't even know. Right, I could just make an app and then Apple would handle like sort of all the other stuff. But it's sort of I didn't realize was a sort of a fundamental theme in my life was kind of trying to make that happen for other people until recently. So I started making iPhone apps. Went to USC. Ben, the CEO of Pinterest, emailed me one day. He saw an app that I made. Got to the type of Hacker News. This app called Data, which I built to sort of track all the numerical data points in your life on a daily basis, sort of quantified self, that sort of movement. He sent me an email saying, "Hey, we work on this thing called Pinterest. It helps you collect, organize, share the things that you love." It was just a few people at the time. This is fall of 2010, so they didn't have an iPhone app. Instagram had just sort of launched around then, and I said, "Sure, like I'll charge you $4,000. Make Pinterest for iPhone." That was not enough time nor money for me to actually finish the project. I was didn't really know what I was doing at the time, but I ended up joining full time in January. Moved up to the Bay. Was employee number 2 over there. Built Pinterest for iPhone, among a few other things. And yeah, that's kind of how I got to Silicon Valley.
Why did you leave school and move to Silicon Valley and actually go join Pinterest?
Yeah, I mean, I really believed when I went to USC I was going to finish. Like, I was not that kind of person who was like, I'm just going to go and join a startup or do my own thing. I was very sold on the degree at that point. Uh, what changed things was, I mean, one, I didn't really know, like, wow, these startups would really genuinely just like reach out to a freshman, right? It turns out in hindsight, like there was so much demand, so little supply on the iOS engineering and design side that they had sort of capped out on people in the Bay, and they had to kind of find these other folks. And But yeah, I mean, the way I sort of pitched it to my mom and myself was, look, I don't know if this is the path for me, right? Like, I still don't know if startups or whatever this thing ends up being is where I want to be in 10 years. And it's going to take me 10 years to go, like, I'm it's going to take 4 years to graduate. Then I'm going to go work at like Google or something for like 3 or 4 years. I'm going to go to like a startup, for like 3 or 4 years. And I'm going to start my own company. Like, that's sort of like the flow that I saw. And how bad would it be if I sort of spent 10 years and then realized, like, actually, no, this is not what I want to do at all. And I don't know if that was me just like playing games to myself, or like I was trying to like come up with a reason to sort of, I've noticed myself doing that in a couple other life instances as well. But yeah, I was kind of like, I can find out now, I can get paid for it instead of paying for it. Right. I just thought, like, worst case, this is like a gap year, right? Like, I joined this company, I get paid, I do it for a year. If it works, it works. If it doesn't work, I can go back to school, right? Like, I have a sort of a newly established safety net at this point. USC is not going to say no to that. And so, yeah, that's kind of how I pitched to everybody. Yeah, it worked. I have yet to go back. I think I'm technically still on a leave of absence. Like, USC gives me a phone call asking for money. So I think they consider me an alumni, but also I don't know how. over there.
What was it like when you got to Pinterest, right? So you get there, people see this, massive company and great success story today, but you got there and
Yeah.
you were employee number two. What is it like?
Yeah, I mean, people ask me this all the time. Like, how was it like working, in the early days of Pinterest? And it's like, well, like I was just watching Hamilton, and it's like it reminded. I don't want to make this kind of. I don't know, maybe this is not the most kind of couth analogy, but like they didn't know what they were doing, right? Like they didn't know what would have happened later, right? And so I think there's this sort of like when you're in it, you're just in it. Like you're just spending time, like you're just building stuff. It's like 4 or 5 people in a room, right? In like a living room of like a Palo Alto apartment with a roommate, right? And we're just like building, we're just like shipping a website, right? Like we're just it's like a Django app. And we have a bunch of users at the time even, right? It's still early, but we had, tens of thousands of users. Engagement was really cool. We had some money in the bank. But it was, it's like especially consumer, it's like you don't know what works in that space. It's really hard to predict. So it's like, okay, yeah, we'll just, keep doing this thing. Like I was just shipping, features every day. I'd come in, like 9, 10 in the morning, like work, get lunch, work until 6, 7, and then leave. Like there was just not that different than what you do anywhere else, right? It's just like, and it's interesting. Even Gumroad now, like people ask me, and I'm like, look, it's the same. Like Gumroad could be 30 times bigger in volume and scale, and my job would roughly be identical. That's the beauty of software. Like that's the point of automation, right? Is to make it so that you can do these things that are affecting, way more people, but it's like the factory doing all the work, right? You're still hitting the stop start button like you normally would, right? It's just like the throughput is a lot higher. Obviously, it's not identical, but it becomes it's sort of like a 20% bump in your sort of like to your organizational competency to get to a 10x sort of bump in like the sort of value creation metric, right? The KPI that you're going after. It's really normal, it's really normal, at least in my world. And VCs would come by and like meet the company, and I would like chat with like Matt Coulter from Benchmark or whatever. But it was very normal, right? I think that it's actually a problem that I have because I've never experienced anything except that, right? Like I was at Pinterest and I started Gumroad, and that's all. And I remember even at Pinterest, I was like, this thing's going to be massive. Like, I think this is going to be a multi-billion-dollar company. And even like other employees were like, yo, like we've been at companies before and we know this is your first run, but this happens this is a common occurrence where you get super excited. You have all these crazy metrics in the beginning. And then for whatever reason, it doesn't work. And so just like, like just hold on to your horses. We're like a $5 million company at this point. Right. And I was like, no, this is it. And it was it, right? But yeah, I mean, who knows, right? Was that me like with this crazy insight, or did I just kind of get lucky? And now I got lucky, so that's why you're listening to me talk today, right? Like it's hard to kind of detach those things. It's not falsifiable.
Yeah, and so what's so interesting to me about your story is you were there early. You did see the metrics, like you did have that insight of, hey, this is going to be a billion-dollar company or whatever. But then you chose to leave,
Yeah.
right? And maybe talk a little bit about like when you first started to think about potentially leaving. Like, what was the thought process there? And then was there some event or idea or something that kind of pushed you over the edge and said, I got to go do this right now?
Yeah, I mean, I really built Gumroad as a weekend project. I had a bunch of these weekend projects that every few weeks I would sort of like hack on something just to learn like Python or learn a skill. I would basically do that, and I'd meet sort of random people from Hacker News and Mountain View and stuff. Like those were my weekends, and I built Gumroad, and that was the first project where the next weekend, when I had sort of blocked off the time to work on a new thing, I was more excited about going back to that old thing. That was the first time out of, I don't know, 10, 20 different little ideas. And so there was something there, right? There was something really interesting there was something about that idea. And sort of like now it might be more obvious, like the App Store basically solved all of these logistical problems for me so I could just go make stuff and sell that stuff. I think there was sort of a connection that I didn't really see there with Gumroad and sort of enabling that same sort of thing for creators, content creators mostly. But yeah, it wasn't about leaving Pinterest, right? It was like, I have this opportunity to start a company. And similar to like Pinterest bringing me out of school, it was like such a good opportunity for me that it just was hard to say no to. And I wouldn't have said yes to like a subpar company, right? It's just like, oh, this is only worth it if it really is like the activation energy has to sort of like supersede all of that. And I think Gumroad was kind of like that. And like investors had started pinging me about it, saying, hey, like we saw this thing on Hacker News, like we see you're an early employee at Pinterest. Would you ever consider leaving? And then honestly, I'd say the third sort of element was I think I was just like a kind of a young, stupid kid, right? Like I joined a startup right out of, I was 18, second employee at this company that was, on this crazy growth trajectory, and so I was like, I did it once, like, why can't I do it again? Right. And I'm going to have like 100x the amount of options in this other company. Right. So like, I don't even have to get that close. It's going to be worth more. And, and it's actually interesting. I think what will probably happen is they will roughly net out in value. It might like if I just stayed at Pinterest and, but like the amount of learning that I've had is just fundamentally different, right? Like there's something about starting a company and being the first, sort of the being responsible for everything that you just learn way more, and like way more people know who I am than if I was just like, sort of an early employee at Pinterest.
As you went through the decision-making process, like what was the original idea for Gumroad, and what kind of did you actually, when you left, what was built, and kind of what was more of a vision, but not yet built?
Yeah, I mean, it was really simple. The way that I thought about it initially was it's Bitly plus a credit card form, right? So basically, all of these people are building their audiences on social media directly. Some of them don't even have websites. They just have a Twitter account, YouTube account, Pinterest account, Reddit account, et cetera, et cetera, et cetera. And so, like, all of these e-commerce platforms, like, they sort of required a website, right? Like a PayPal button, where would you put it on your website? Like this, where would you put it on your blog? On all these kind of things. Uh, and so I was like, this doesn't make sense for this new world where everyone is just getting started building an audience. They might have millions of followers that want to give them money, and yet don't have a website, right? And so that was like the thing, was like, okay, what do people use to kind of share content? Bitly, like, okay, Bitly plus credit card, before they get to the sort of the end content, like, let's build that. And so that's all Gumroad was, like, super, super simple. I had all these ideas for like, what could that enable? But I think when you democratize something, you just have no idea, right? Like you have no idea like what the consumer sort of behavior is going to look like, what the traction is going to be. But you're making something way easier, way more accessible, and then you do it, and then you see it. Well, okay, like because you don't know how many people. Like my vision was like, there's all this content out there that creators have sitting on their computers that they don't currently sell because they're not at that level, that activation energy to kind of like create a storefront, get a domain, do a brand, a logo, have a bunch of SKUs, right? Like really start a business effectively. And they just want a lemonade stand, right? Like that's all they want. They want to kind of trial this thing out. How much of that is there? And I don't know, because these people have done it privately. They don't sort of share this stuff publicly. And so that was kind of the thing, was like, I'm just going to go. And that's how I kind of pitched to investors, like Naval on Max Left Channel. I was like, look, I don't know where this is going, but there's something interesting about sort of just making it, what if it was, 5 minutes to create a storefront, right? What happens if you do that? And we'll see, right? This is sort of like heyday of Bitcoin. Like I think when Gumroad started, actually one of the guys who reached out to me in those days was this guy, Brian, who was an engineer at Airbnb, who was interested. He was like, hey, have you ever thought about doing a Bitcoin thing? I really wanted to get into this crypto thing. I think Bitcoin was like 70 cents at the time. And I said, it's interesting, but it's early and like, I don't know what's going to happen. So he ended up starting a company called Coinbase, which did pretty well. But yeah, it's just like, you just don't know, right? Like you don't know where people keep, it's like even the stock market, right? Like people keep trying to say, oh, this is why. And it's just like, no, you don't know. It's a complex system. And if you knew why, you wouldn't be telling anybody, honestly. Like, you would be, calling or shorting the market, on a daily basis if you really had this sort of conviction behind it.
Yeah, the one thing though that I think you did have, at least it sounds like an idea that was going to continue, was this kind of idea of creators and audience building, and like you were basically betting on like a macro trend there.
Yeah.
And if that was going to go away, then this idea specifically probably wouldn't work. But if that accelerated, as now with hindsight bias, like or hindsight clarity, like it did, this was going to be something that could be very valuable, right?
Yeah.
And so maybe talk a little bit like, why did you think that was going to continue rather than disappear?
Yeah, I mean, I think it's finding like the through lines, just like the trend lines of society, right? And it's like something that's hard is going to get easier over time. Something that's expensive is going to get cheaper over time. Something that only, companies with 100 plus employees can do is going to companies with 10 employees or one employee eventually are going to be able to do, right? And so it was like finding those things, and really, I really believed, like, the insight I think I have, if I sort of had to sum it up in a sentence, was everyone was connecting directly to their audiences, right? Musicians, designers, writers, filmmakers, stand-up comedians, everyone was building a direct link to their audience, right? Imagine 10, 15 years ago, if you were Justin Bieber and you wanted to talk to your audience, you'd have to do like an interview with like a People magazine, right? And now you could just go on Twitter, Instagram as much as you want and have a direct relationship with them. And so, but all of the commerce was still traditional, right? So it's like you'd still sell through like radio, record store, label, publishing house. Like there are all these sort of traditional things, and if you look at the economics of it, right, the artists make very little as a percentage of sort of the volume that they're really driving. And so I said, this is weird. Like there's all of this sort of like inefficiency in the commerce side. There's all of this efficiency being brought into this sort of communication discovery side. And so my guess is eventually this stuff is going to get disintermediated, right? Like you're not going to need a middleman. You're not going to need a label potentially. You're not going to need a publishing house to do certain things because a lot of these ideas aren't going to make sense in this new world, right? Where you just don't need it anymore, right? Like, and to me, that's always really interesting. Like, what if you just, like what do we not need? Like, what is going away? I think is a really interesting framing, because that's a lot of that is what innovation is, right? Like, what if you don't need, a dishwasher used to refer to a human being, right? It often still does, but you know what I mean? Like a computer actually used to be a human being, right? Like these are people and jobs that we don't need for our society to function anymore. And that's great because those people can go do something else, right? That is sort of a better use of their time, more creative use of their time. And so that was kind of the insight, was like, there's clearly this shift happening that I don't see slowing down, which is every single person, it's still happening, right? Every single person is going to connect directly with their audience via their blog, their newsletter. And like the internet is going to get better and better and better at finding the right connections. You're going to, like, it doesn't make sense to me that like your high school friends are your friends for life. Like, what are the chances, right, that those are the perfect people for you and your tribe and your personal growth and development? They probably don't even speak your language, to be honest, right? And so it's like, over time, my guess is that every single person will be able to communicate very effectively with everybody else that they want to, right? And sell directly is sort of like the next step of that. And so that was the trend. But even like Gumroad, before Gumroad, that was happening too, right? Like people had blogs instead of, I guess, submitting op-eds to like their local newspaper or something, right? Like this is like that's the other thing, is I think there's this why now question people ask, but I really think it's a slope, and it's like it should have already been happening, and it will continue to happen. Like the creator economy is this big buzzword right now because of COVID and all these kind of things. But like remote work, for example, has like been happening. Dreamweaver, I mean, I would say Excel is like the premier no-code tool, right? And that's been around for decades, right? It's a thing that's already been happening. It's just continuing to happen, and as it continues to happen, it just makes its way to different people, right? Like it's like the William Gibson quote, "The future is here, it's just not evenly distributed," right? So it's like I was already communicating directly with my audience, on Twitter 12 years ago. It's probably a pretty good bet that like I'm just early, right? And there's going to be way more people doing this. And it sort of goes in line with my philosophy around doing the fun and all these other things. But it's like, find the thing that you really believe you're early on. iOS development, right? For me, it was that as well. Cryptocurrency might be that for you or other people. Like it's so hard. And it's just like, follow your interests. It's like, go down the rabbit hole. And if you sort of discover something and you're like, there's something really interesting here, and at some point it could be tomorrow, it could be 30 years from now, it's going to change the world, or everyone's going to use this. It's just so obvious to you. Like, figure out a way to like invest in that thing, right? Sort of start making pickaxes, right? If you find gold, that kind of thing.
Yeah. And so what's really interesting is you have this insight, you build kind of the side project that then all of a sudden starts to gain some traction and people start reaching out and saying, hey, do you want to raise money? Do you want to leave? You obviously are watching the metrics. And at some point you do decide to leave. Now, to clear up one of the, I think, misconceptions, being the second employee at Pinterest does not mean you get to be rich forever if you leave before your stock vest, which is what
Yeah.
you did. And
Mhm.
so talk me through kind of the transition out. When did you raise money? Kind of what was that conversation like? And kind of in hindsight view now of having left before the stock vested, like regret, good decision, kind of just talk me through all of
Yeah.
that.
Yeah. I mean, probably not a good decision, financially, at least. Yeah. I mean, I think I was just, I was not savvy enough, I would say. What I should have done in hindsight is I should have been quiet and been like, this thing is going to work. And I should, it would be nice to have some safety net here. So like, let me, even though I have this cool idea, and Pinterest is fine, but not as cool as starting my own company. Like, let me just wait for a while, right? But again, if I did that, like, I would hit my 1 year, and then every month there's like this, So I don't know. I don't know if that would have been a better decision for me. Maybe I could have. My presence would have tanked the company, and Pinterest wouldn't be anything today. Who knows? uh, but yeah, I think I remember talking to Josh Ellman about this. He's like, look, when I was talking to him about Gumroad and leaving and things, and he was like, look, you can either have 100% of a small thing or 1% of a big thing, right? And I'm just like the 100% of a small thing kind of person. Like, I really want control. I want to decide who I work with, where I work, how I work, what I work on. And just the truth is, you can't do that if you're working at a company, right? Like, you just can't, right? Ultimately, you're gonna be put next to somebody, and you're just like, I don't really like this person that much, right? And I don't know. I don't think I could ever do that again, honestly. Right. Which is, I just think it wasn't about the financial thing, but certainly it was stupid. Like, I should have been smarter about it. I should have probably negotiated with Pinterest or something, but I just didn't know anything. Right. And they didn't either. I think it was like a sort of a new, fresh situation for everyone involved and sort of a trial by fire. But certainly I think I could have probably figured out a way to keep, uh, afford them my stock, which I think the math ended up being, it would have been like, 10 to $20 million or something for staying an extra, like 6 months or 3 months or whatever it was.
Yeah. And look, it's also one of these things. I love your perspective on just like, who knows what would have happened, right? There's a million different things that could have been, but you left and you said, hey, look, I'm going to go take a run at this. And you probably more so than anyone else I know of have had the ups and downs of kind of the entrepreneur's journey. And so let's start with kind of the initial up, which was you walk out of Pinterest with Gumroad, you raise some money, kind of what are investors investing in? Who do you go talk to? Why take Kleiner's money? Kind of what was that all like as you kind of started the company?
Yeah. I mean, so I had a few investors who pinged me saying, hey, if you do a company, let me know. A bunch of investors who followed me on Twitter. So when I said I was leaving Pinterest, I got a bunch of email from that too. And so I just started meeting with people. And this is like the old school. I mean, especially with COVID, like the way you fundraise today is a little different. But back then, right, it was all kind of Sand Hill Road, kind of Silicon Valley people. And so I would just meet with a batch of people, right? Like the first set of people would reach out to me. I'd have like a little, like, I don't think I had a deck or anything. I just had like the website. I would just go to Gumroad.com on my laptop and just talk to them about it. And it certainly helps being like employee number 2 at Pinterest and being a technical, developer, et cetera. But I would just talk and be like, look, I'm building this. I'm really interested in this sort of democratization of commerce, starting with like the lemonade stand to the Shopify. Like, what does that look like? And I ended up, yeah. And so I would meet with all these people, and then they basically, a few of them would say, I'm in, like, let me know. By the way, you should talk to my friend, right? And so there's this tree that kind of builds pretty quickly that you kind of meet with, a bunch of people, 100, 200 people or something in a few months that are interested in investing in you. And I ended up raising $1 million from, Naval, Max Levchin, Lowercase, Collaborative Fund, First Round, Excel, SV Angel, Seth Goldstein from Turntable, and maybe a couple other folks, but a good list, pretty solid list, around $1 million. And Kleiner happened pretty soon after. I moved up to the city, got an office, started building stuff, and I don't really know what happened. I mean, I think there was, like there's only one Series A that a company can raise, right? And I think there are like 8 to 10 firms that are kind of tracking all these kind of pre-seed, seed funded companies. And I think I must have just been like one of those companies that, was super hot, came out of the gates, and at least 2 firms were like, if you want more money, we will like do your Series A and sort of preempt, you doing it a year from now, right? And so I sort of just had 2 meetings, one with Index, one with the Kleiner, got 2 term sheets, and ended up picking Kleiner. But the reason was, and I talked to like all my investors, like what should I do here? And Josh Koppelman from First Round, he has this great quote. He says, "There's nothing like numbers to F up a good story," which is to say, you're hot right now. Like you can kind of raise on the story that you're telling and you're convincing. But the minute you have a year or so worth of data that maybe shows there's some holes in your story, which might be true, might not be true, you might not be able to raise as easily. You might, so you're these people are paying up right now, and they might pay up even more, but they also might see the data and be like, oh, there's nothing here, right? The emperor has no clothes. And so I was like, yeah, it was a 7 on $28 million round. So it was like a pretty good round for a Series A at the time. And then I wouldn't have to think about money for years, right? Like I could just focus on building the team, on, talking to customers, doing that whole thing for 2, 3, 4 years before I really had to kind of like think about raising money again and all these things. And so that was the big reason I did it, was like I could just sort of do it. I had just raised the seed round. I was like, I can just raise all of this money collectively, and then I can just like go build stuff for years and really figure this thing out and not have to context switch right into this fundraising cycle, which in hindsight I think had some downsides to doing that too. But it was just so the idea that I could just work on something for years and not have to sort of talk to anybody else and just focus on building was just so appealing to me. So that's kind of what I ended up doing.
And so when you take venture money, obviously they want venture growth, they want venture exits, and kind of slam on the gas is a very kind of crude way to explain what they expect you to do with that money. As we fast forward in your story, you end up buying Kleiner out for $1 at some point.
Yeah.
And
Yeah.
so people who just heard you say you raised $7 million shortly after raising $1 million, kind of a who's who of Silicon Valley, and then you're buying Kleiner out for $1. What happens in between raising money from them to that moment?
Yeah, I mean, we grew we did okay. Like, I think as you mentioned, it's like, yeah, VCs, they kind of think of it like like jet fuel, right? Like just make sure you're pointed in the right direction before you use it. And yeah, we did okay. Like we grew to a nice, like probably 1.5 to 2 million annual revenue. Business were growing maybe like 60-80% a year at that point. Just not fast enough for VCs to say, hey, this is worth like a Series B of like 10, 15 million dollars, right? At like a whatever 100 million or 60 million dollar valuation or something like that. We weren't there. And I did the rounds, like I met with all the investors and like all of them, because that's what you have to do when the top ones say no, and you kind of just start going down the list. And it was good for me though, right? Because I feel like I had the easy way the first couple times, so it was nice to kind of not have that and learn about that. Obviously not nice entirely, but yeah, we did that. Kleiner gave us a bridge of $2 million. Well, when we realized it was going to be hard to raise more money to really sort of double down on sort of growth. And not have to do layoffs then, which would have been kind of like a death knell for the company. And so they gave us a $2 million bridge at a 4x liquidation preference. So at that point, we had $16.5 million in preferences. And it was like a kind of a Hail Mary, right? Like, we're going to try to make this thing work, and hopefully we can like find something that just like accelerates the business. But we spent 9 months, January of 2015 to September, October-ish, trying to find that. And we didn't. It turns out if you didn't find it 3 years into that, you're probably not going to find it in the next year. Something like COVID kind of has to happen for that to change, which you can't control, right? But yeah, so we did this round of layoffs. We went from 20 employees down to 5 employees and got to profitable, because that was like the number one thing I wanted to do. Is like, look, we're paying like $2.5 million a month to our creators, right? Like, we might not be like a crazy successful VC business, but like, we're still meaningful for these people. And so like, we need to get to profitable, because I can't just turn off the faucet for them. And so we did that with 5 people, got to profitable, got rid of the San Francisco office in 2016. And then I left. I ended up moving to Provo, Utah. I told my investors, like, I'm burnt out. Like, I've worked on this thing for, 4+ years. It's a $1.5 million in revenue with basically no team, like a skeleton crew, growing 15%, 20% a year, and with $16.5 million in preferences, right? Like, there's like, for years and years and years, there's no exit, right? Like, there's nothing. If I sold the company for 16.5, for folks that don't know what that means, basically it means if I sell the company for 16.5, they get 16.5 and I get 0, which is the deal. I'm not complaining. That's just what we got into. But it basically means like a $1.5 million annual recurring revenue business growing at that rate is not worth that, and will not be worth that for a long time. And so I said, look, like, I tried, I'm going to put this thing on autopilot. I'm going to try out the 4-hour work week, and then, write and paint and kind of explore my life and just kind of take a sabbatical, have a quarter life crisis, et cetera. So I ended up moving to Provo, Utah, did that for, over 2 years. So I left in I guess that was late 2015, early 2016. And then I think it was late 2017. So 2 or 3, or maybe 2018. I can't remember exactly. But Kleiner, anyways, they emailed me saying, hey, I had some conversations. I was like, I'm going to open source this whole thing, because like, I want we're never going to build this great business, but like, the world can benefit from all this technology that we've done. And they were like, well, if you do that, it kind of as a way to say, look, there's nothing here. Like, let's just clean up the books. And like, this is like going to be some free software for people. And they were like, like, that's still worth something. Like, we still kind of have the IP ownership of that. And like, but then randomly, kind of like 3 months or so later, they were just like, hey, we're would you be willing to sort of we'd be willing to write off the investment, effectively sell you all our shares back for $1. And I still don't know why necessarily. Like, they didn't give me a reason, right? They weren't like, this is why we're doing it. I don't know if it's like some internal thing or some like tax write-off thing or whatever. But I think it was probably just like, just like sort of Mary Kondo style, like cleaning up sort of anything that could be cleaned up, right before a tax year or something like that. But yeah, basically they wrote it off. And then since then, Gumroad has sort of shifted a little bit. But I think that the sort of some of the context that gets missed here is like, a lot of people are like, haha, Kleiner, like they lost, they basically wrote off this investment that might now be doing well because Gumroad is in this different place. But the truth is, like, I think Gumroad would not be in this place without that having happened, right? Like, they had kind of suffocated the company in a sense, because we'd raised all this capital and I couldn't work on it. It just didn't make sense for me to work on it. And when that went away and down to $2 million in preferences or so, I was like, oh, like, this is now interesting. I started hiring a team, started shipping again. We went from 15% year over year to 25% to 40% to now over 100% year over year. So, but that wouldn't have happened, right? That wouldn't have happened if Kleiner and, I had, that sort of like level of preferences that like would have made it untenable for me to really work on it. So it's kind of this weird Schrodinger's cat kind of thing, right? Like, that you don't really know, what's going to happen, or the Heisenberg sort of uncertainty principle, right? Like, you kind of mess around with the experiment. You never know, like, the sort of the position and speed or whatever kind of metaphor.
Yeah. So before we kind of start analyzing some of this, just where is Gumroad today? Like, what metrics or kind of numbers, how do you talk about where the business is today and how it's doing?
Yeah. So what I say is we're processing around $150 million a year for creators, which is, smaller than Patreon and teachable and larger than Substack and everything else, basically. Obviously, we're a lot older too. We're at around $10 million in ARR. We're doubling year over year, largely due to COVID. And I think we would have been maybe 60 or 70% without COVID. Now we're at over 100% with COVID. And we just, we're just focused. We have a tiny team. It's like 10, 15 people. And we just, we're just going to build. We're just going to keep building stuff and, shipping software and making it better and better and better. And we're kind of on the faster horse kind of thing, right? Like Steve Jobs has the quote. And I'm like, look, like we're happy building like, the car could only have been invented by one person one time, right? And we're happy with the faster horse. Our creators are very happy with just focusing on the problem and making it better and better and better, and not trying to kind of go too big or try to bite off too much or what have you.
Yeah. And so what it feels like is today you're running a business that you still have got some preference, right, in the capital stack. You still have some of those early investors that still have exposure to the equity. But where you kind of ended up is as if you didn't raise venture capital, right? And kind of that's the business that you're building today, which is you're using cash flow to grow and kind of do that. And so you've seen both sides, right? You've seen kind of the benefits of that, and you've also seen the benefits and challenges of raising venture. You talk all the time about should people raise money, should they not? Kind of what's the high level of how you break down, like when do you raise venture and when does it maybe not make sense?
Yeah, I mean, I think you raise venture if there's something you want to do that you just don't have sort of the profit sort of stream to do so, right? If you're like, I need to solve this problem and I want to solve it now and I need some money to go solve that problem and I'm willing to sell, like people always talk about it like, oh, you raised this much money, right? That's the term people use, but you're selling a part of your company, right? Like that's a big deal. You can't unsell that very easily. And so I would say the way to think about it is like, is this worth 10% of your company, right? Like that's more expensive than a loan. That's more expensive than debt. That's more expensive than almost anything, right? A piece of your company. And so, yeah, just, kind of just make sure that like this is the thing that you want to do and it's worth selling, for average sort of round is around 20% of your company, right? And so you're getting $1 million, you're also selling 20% of your company for it. And you just have to do the math. Is it worth it? Can you build this, without that? Maybe you should. I think I always, I always try to ride the line between VC is bad and VC is good, because I think both of those are simplifications. And I think most people kind of understand that, but especially people in the industry, I think they do. There's no one who will tell you to not raise money faster than a VC, I feel like. But they get this rap, I think, because they kind of like push the companies in a certain direction. There's sort of this one size fits all model, but that's just what it is, right? It's just like understanding like, yeah, this is what VCs are going to want from you because this is their business model, and just like understanding the incentives that they have is just, a good thing to do. And not just the VCs, by the way, right? But early employees and executives and everybody you work with is trained around a certain incentive model around they get a bunch of stock, and then that stock appreciates in value. And then at some point they liquidate that stock, which is a very different model from you work at this company and you get a profit share, right? That's a fundamentally different kind of business. And Gumroad kind of got lucky because we basically went down to zero. And so when I rebuilt the company with new folks and everything, I could say, look, this is not that kind of company anymore, right? So don't join if you're looking for that, because we have the numbers to F up a good story now, and we don't have that, right? And it's been freeing, right? It's great. Like employees aren't sort of obsessed about, are we going to run out of money? Like, are we going to need to raise? Like what should we work on? Like we should work on the thing that drives the most volume tomorrow, because that's what's going to, that's what matters. And it's just like, let's just build a great product, right? Everyone gets paid. Everyone, does the work, and, it's a very low stress kind of environment, but you lose things too, right? Like you lose some of the impact, the urgency, the sort of, when you're fighting a war, like there's some good things that come out of that too. And I have empathy for that as well. I just think it's like, yeah, if you have plenty of money and customers are paying you plenty of money, you might not have to raise, or you might be able to raise, like 1Password did, right? Like a lot of money at a very low dilution and sell a lot of secondaries to do it. And I think it's just about optionality. I think the biggest thing you do lose when you raise VC is you're opting for the liquidity model. You're stating to everybody, the way that we end up making money here is we sell the business for, a 10 or 100x on where we're at today. And that's it. That's the way that we're going to make 99% of the capital, that the sort of return on investment. That's when it kicks in. And so that is either an IPO or an M&A deal, right? That's about it. Those are the only two ways you're going to get liquidity on your stock in like a meaningful way. And so just know that, right? Just know that that's and there's nothing wrong. Gumroad might still IPO one day, right? But yeah, I just think a lot of people get into it and they go through YC, they raise a couple $1,000,000, and then they're like, oh, I didn't know that this is what that meant. Like I actually have to go for this kind of home run strategy, right? Otherwise it's not meaningful.
One of the things I've always thought would be really interesting is if people talked about fundraising in reverse chronological order, right? Which is normally they talk about it as, oh, I'm going to raise this money, then I'm going to do X, then I'm going to raise this money, then I'm going to do Y, whatever. What you're really talking about is like, why don't you start from the finish line and then work your way backwards, right? Like if I told you you could have a business that throws off $20 million in cash and you and your employees put it in your pocket at the end of each year, like, would you be interested in running that business? Or would you be interested in running a business where basically you have one big payday when it goes public? By the way, both are fine, right? Neither one is right or wrong. It's just the finish line of what makes you comfortable or not comfortable ends up actually dictating what you do on the fundraising side much, much more than, hey, I need the money today because if not, then I can't hire this employee.
Yeah.
Right?
Well, that's that great tweet, right? He says like the only thing that sort of level of whatever measure of intelligence is, did you get what you want out of life or whatever, right? Which is just to say like, look, like if you want, to run like a $100,000 a year business that just churns cash and you want to go live in Thailand and that's all you want to do. And that's sort of the Tim Ferriss-y kind of 4-hour work week kind of thing. Like that's great. Just make sure that you sort of are thinking about that and planning, that kind of future. Right. And if you want the sort of crazy kind of like, double or nothing sort of model, and then maybe you get a bunch of money, 10 years from now, but that's the only way you're going to do it. You're never going to be able to get to that scale or that level of impact or whatever, but you're also almost definitely not going to get there anyways. Like, just know. And I think the thing that a lot of people miss, like some of the anti-VC crowd, I think when they look at my journey, they're like, oh, look at this person. He got, used, or like he was like, manipulated, and I do think like I have loved every moment of my life, right? Like I've never been in a place where I feel like, oh, I don't want to be here right now. Like I signed up for everything. I knew kind of what I was getting into. And every single time, like I learned, I met people, I built my skill set, my credibility. So it's like, I don't regret it, right? Like I'm very grateful for everything that I went through. Sure, I wish I maybe had some more nuance around the edges, but it's way better than I think just being, at a company that I don't enjoy working at, which is sort of an experience that way more people have, right? On a daily basis, especially right now.
That you wrote this blog post about not building $1 billion business and not kind of being able to use venture capital to build a venture scale business. The post goes viral, and now you pretty much got a venture scale business, right?
Yeah.
You're growing 100% year over year, $10 million in ARR. Like it kind of looks like almost what a early stage investor was expecting or hoping that you would do. His question is, did the blog post contribute to you becoming a venture scale business? But maybe talk a little bit about the blog post and kind of, what transpired after you wrote that and it went viral.
Yeah. So I wrote this blog post really to sum up the last 9 years of my life. Like it was kind of a capstone for me. I was just having conversations with people and, people that I thought had kind of known what had gone down. And I realized even people like my mom, like had no context on what had actually transpired. Like it just happened. I kind of disappeared, and everyone kind of let me be. And so people thought I'd sold the business. People thought it was dead. Like everyone had their own kind of telephone game kind of going on. And so I was like, I'm just going to write this piece, kind of show it to everybody. Everyone can kind of know what happened, right? I can say that I don't have any picture stock, and like I can just clarify all of these things. And so I did that. And then, it just kind of went sort of super viral. 800,000 people read it. I gained a bunch of Twitter followers from that, which kind of like started this like new sort of Twitter thing for me. But I think the biggest thing I think that people appreciated was like, it was just the nuance of it, right? It was like, it wasn't like, I wasn't trying to sell anything. I wasn't trying to convince anyone that that like I was on the right path or the wrong path, or like VC was good or VC was bad. People might have taken that message, but it was just like, look, this is the story, right? Like, I'm just going to go through what happened and, take it or leave it. Right. And there are a couple lines in there that I think really resonated with people, but I think the biggest one was just that there is like some level of uncertainty here. Right. And like, you just need to be comfortable with building, not knowing exactly what's going to happen. Right. You can't predict like if this is going to be $1 billion thing, $100 million thing, a $10 billion thing. Like, no one really knows. Like, you should just really focus on building something you think is interesting and valuable for people that sort of gives you the lifestyle that you want. And then just be happy where you are, right? Like, just be happy where you are. And then if it happens, like these other things happen, like, great, but they're probably not going to change your life drastically, right? If you're already pretty content with what you have, which is kind of the model that I've been trying to live my life since, which is to try not to set goals and do too much. And just, even now with Gumroad, right? Like, I get VCs that are like, hey, Gumroad, like, have you thought about raising money for this thing? A lot of that's just BS. Like, they haven't done their research. They don't really know like the history of the company. But even, friends of mine at top tier firms are like, hey, but, have you thought about this? And I'm like, look, we're profitable. We make money. Like, money is not the bottleneck for us right now. And I know the creator economy is super hot. I know these things are happening, but we still don't know how this thing's going to play out. Right. And if, I'm just not willing to, like, it's a very different deal for a VC, right? A VC gets IRR, right? So like their investment begins today, right? So like, they actually love the fact that Gumroad had this 9-year journey, because like, they're just paying for now going forward, right? They're not paying, like, if they did this deal and then had to wait 9 years, their sort of annual return would be destroyed, right? So now they see it as a great investment. But like, for me, I'm like, I finally got here, like what I tell friends, I'm like, look, I like spent 9 years building this business. I finally have scale and freedom. Like, I'm going to spend a couple years just building the stuff that I want to build for the people I want to build for, with this, a little bit more of like a vessel for me to kind of explore those kind of things. And then I can say, let's go big, right? Let's find a new CEO who wants to go big. Like, I don't know what that looks like. It probably doesn't look, I've thought about doing a Reg A plus, like doing sort of a crowdfunding kind of fundraise around it from our creators and the community. That might be really interesting. I just think I think of Gumroad like an experiment. I think that the thing that I can do that very few other people can do is, because of my weird journey to where I am today, I have this kind of weird, unique place where I can basically do whatever I want. I can run all these weird experiments within the company. I can like try out these sort of different processes and software tools and ways of working in a way that just most companies are either can do that, but they don't have any scale, or they have scale and therefore they can't do that. Right. And Gumroad's in this weird spot where I feel like it's almost like my duty to kind of just experiment a little bit and like kind of just push the envelope in ways that are probably bad, right? They're probably not going to lead to change. So there's sort of like the Lindy kind of effect there. Right. But like, I think it's worth it. It's worth like sort of pushing the Overton window a little bit. Like, what if we don't need meetings? What if we don't need this? What if we do need this other thing? What if we open source all this stuff that no one does? And I just think that I can add a lot more value to the world on these experimental kind of side effects of running Gumroad almost than like Gumroad itself. And I think that's like a really interesting kind of place to be.
One of the things that people seem to be very fascinated about, and I think because it is so different, is you've chosen to operate a business, the metrics that you share, the information that you put out there, it's just so transparent. Where does that come from?
It comes from, I don't know. I mean, I think one misconception is that I think people think I just started doing it right after the blog post, or like I sort of like adopted this new style. And I was thinking about these other folks who've done it, like Justin does it really well, Justin Kahn, Naval, Balaji, and me, I guess. And I realized that like they've been doing it for a long time. Like, you can go back, I mean, Justin Kahn, he literally had a camera taped to his head for 24 hours a day, right? So like, it's not new. It's not like, oh, Twitter, like we want to do this thing now because we want a bunch of followers. It's like, this is just what we do. Like we like Naval has been writing, like I started reading his blog in like 2005, 7, something like that. You know, I just think there's I think you're probably similar. Is my guess. Like, there's just a personality type that is like wanting to share all the time, and it's not really about the sort of strategic value of doing it or not doing it. It's just like, I need to do it. Like, I need to tell people because that's how I learn. That's how I get feedback. That's how I feel good about what I'm doing. And and it's just like a feedback mechanism. It's like, why would I can do a fund, and I'm gonna have to spend all this time reading stuff and like talk to all these people one-on-one and like make progress, or I can just tweet, hey, I have a fund. No one does that. Like, it's not even closed. I'm just going to talk about it. And then 100 people, 200 people can be like, hey, what have you thought about this? What about this? You should talk to like, to me, like that, it's about liquidity, right? It's when you get rid of some of this opaqueness. It's like why all the startups have switched like glass walls in their conference rooms, right? It's just like when you create that sort of that openness, you can sort of create more of these serendipitous connections, right? Because you can now see a lot of it. It's just exposed. It's like, oh, I didn't even know that you were next to me this whole time, and we could work together on this thing or whatever. And so I've always just been like a core believer in that philosophy of like, and maybe that's because I grew up in Singapore and there was no tech real scene there, and even when I got to USC, it was minimal. So I was always trying to like find my people online, on Hacker News and Twitter and forums and things like that. But I do think there's some sort of like fundamental personality trait that I don't know what it is. Like, I don't consider myself an extrovert, but there's this kind of like weird, interesting version of an introvert or something that like just wants to make me like, I started painting. I'm like, I'm going to create an Instagram account and start posting my paintings because that's like, I want to have a journal and I want people to see my improvement and again, give me feedback. And like, it's been so great. And I think all these people, they wait until they're really good before they start doing that kind of stuff, right? There's like, and I'm just like, why? Like, there's nothing to learn from someone who's really good, to be honest. Like, what are you going to learn from like Jason Calacanis at this point, right? Like, there's just, like, you forget what you didn't know, right? Like, you just don't, I can't, like, even when people ask me about fundraising, I'm like, look, I can tell you all I know about fundraising circa 2010, 2011, 2012, but like, pre-seeds didn't exist back then, right? Like, there's a new sort of like, you should actually just talk to someone who raised money yesterday. Like, that would be a much better person to talk to about fundraising. I'm happy to connect you with them. And so I think there's this idea that like, I don't know, like there's this like strategy behind it, but it's really just like, I'm just doing what I do and it feels right to me. And it, just like I got into iOS development because it felt right, not because I thought it was going to change like everything. And it's that sensibility that I think is what's really important, because I think you have to find that for everybody, right? Everybody has to find that thing that is kind of like driving them into an interesting place. Because I believe there are millions of those places, right? And I think you can make plenty of money in all of those places, and you'll certainly be happier. I think there's this worry I have that people kind of see someone's success pattern, and then they say, oh, that's the way that I need to become successful. But the truth is, if you're starting out today, the way that you become successful is going to look very different, right? Because the platforms, the growth, the macro trends are different, right? Like and I can't tell you what those are. Like, you have to be a kid who's like in the middle of nowhere, messing around with like AR stuff or like, audio, social networks or whatever, and be like, oh, this is a really interesting idea. And then spend, a few years, and then it's like all of a sudden the whole world is like paying attention, right? And I think John Collison says just, you have to be willing to go down the rabbit hole. And you just have to, because if you want to be on the frontier, which is what you kind of need to be at if you're building something interesting, sort of by definition, right? Like, there's not going to be a lot of people there. No one's there to come back and tell you, by the way, this is the path, right? You have to kind of be the one going into the forest and like finding the weird thing. And you don't know when you're going to find it, right? That's the kind of the other thing. It's kind of stochastic. Like, you don't know, like, oh, on the other side of this is like the number 0 or gravity or like, or the sort of the evolution, right? Like, it's just like, no, you just got to do it because it's interesting and weird and like, it's fun and it's satisfying to you. And then you might discover something like the United States of America, right? Like, that wasn't their goal. They weren't trying to do this thing. They were just trying to solve a problem that they had. And then, whoa, holy crap. It turns out that this was like a massive, massively sort of important evolution in human history to get to this sort of like liberal democracy. But you couldn't have planned for that, right? You couldn't have had a business plan that's like, our goal is to create America, and this is the way we're going to do it. It was like this very trial and error thing. And that's sort of just what I think sort of innovation and invention kind of need. That it's just like this sort of constant sort of trying to solve our own problems, and we solve our problems, and those lead to like an interesting life, a new different life that has other problems that need solving, and then you solve those, and then you have other problems that need solving, and then you solve those, and I assume that like human history, like I really believe, going back to that whole early thing, I think that's a fundamental sort of belief that I have, is that we're super early, right? Like I think humans, if we make it for an extra 1,000, 2,000, 10,000, 100,000 years, like I can't imagine what that world looks like, but I assume it's going to be insane, right? In a way that I can't comprehend. Just like a phone, if you showed a phone or a gun or something to someone, a couple hundred years ago, maybe not a gun, but you know what I mean? Like it would be, they wouldn't know what to do. They'd be like, this is magic. Like we're going to burn you at the stake, right? Like,
Well, forget even a couple hundred years ago. I mean, literally, there's videos of people who went to jail in the 1980s or 1990s come out and they look at an iPhone like that, right? So
yeah,
forget
yeah.
hundreds of years. I mean, we're literally talking 2, 3 decades, right?
Yeah, I'm still blown
much.
away, dude. Like I just got a magic keyboard for my iPad, and I'm like, this is insane. Like this is the trackpad. Like it's mind-boggling. Like we're so, and that's why I'm excited to be an investor. But I'm just excited to be alive, because I just think there's just so much more. I think there's this. We always talk about the black swan, right? Like these events, like COVID, and these other things that kind of like tank, sort of like the tail risk, right? But I just think we don't spend enough time thinking about like what does the upside look like? Like what are the white swans, right? Like what are like the crazy things that we're going to discover? And it's like, oh, that problem that we thought we'd had to solve, we solved it, right? Like like penicillin, right? Or the transistor, or plastic. Like there are a lot of these things that like Stripe has totally changed the game for sort of startups getting getting online, and that didn't exist 15 years ago, right? And so like what is that next thing, and what is that going to enable us to do? And even things like climate change, like I'm obviously, like it's a thing we should work on, and it's not going to get solved unless we work on it, but I'm also incredibly hopeful that we will solve it. Like I just believe that sort of fundamentally. Maybe that's not good, but like I just really believe that we just don't know that sort of what's on the other side, right? Like what are we going to invent? What are we going to discover? What two things are we going to put together that very quickly will seem obvious and become universal? And it's like, can you believe that like back then we had a problem? Like back then people just used to, this is how toilets worked not that long ago, and now like we don't even think about it, or food production, or like there's just so much. There's so much. I think there's so much to be discovered. Even like I had this moment very recently when I saw the what is that, like the Starship or something, right? Like and I was just like, this is insane. Like this thing is like, and I could like visualize in a little bit of a future where we're just going to Mars and back, or Moon and back, like over and over again, like an elevator, effectively. And then you realize like that's all it is. Like it's rocket science is actually incredibly simple, which is you just take like a heavy thing, and then you just like have to move it like into space with a lot of, it takes a lot of work, right? So it's not easy, obviously, but like it's a kind of a simple physics problem where you just have to take this thing, and like if you could, you would just you just have to move it there. Like you're just trying to get this thing to from point A to point B. And then when I saw it, I was like, oh yeah, that's all it is. It's just like a lot of fire, like a lot of explosions, effectively. And I could just like, and I'm like, oh, this is the future, or like the future. This has hints of the future. It's like when you see a painting and you're like, you're inspired, right? You're like, there's something. We're like unlocking something. Like soon we're gonna know why this is interesting. We just know that it is interesting. We haven't figured it out yet.
So you've obviously spent the last 9, 10 years building Gumroad. You've made a couple of angel investments along the way, but now we're going to dive kind of deeper into investing. One, maybe talk a little bit just about some of those angel investments you made, how they went, and then why focus on actually putting together a fund and going and kind of being more organized and serious about the investing activities.
Yeah. So I did just a little bit of angel investing previously, especially before Gumroad. I did 5 deals before Gumroad when I was at Pinterest. And that was really for me to build like a mental model of the industry, right? I was like, okay, I'm a founder. I was an early employee. I want to be a founder at some point. One great way to learn about this model is to basically take the money I didn't give USC and invest it into startups. So I did. I invested in 5 companies in 2011. Two of them did quite well. HelloSign ended up selling to Dropbox for 230 million, and one, Movable Ink, is going to do something pretty well as well. And so I had just like from 5, I'd had two good hits. And so that was like, okay, I have some sensibility, some taste maybe here. And then I did my 6th deal was Lambda School. I did 2017, their seed round. That's also looks like it might be good. We'll see. Again, like you don't really know, right? It could be massive. It could go to 0. But that was an interesting bet. And then in 2019 and 2020, I did a bunch more, like 10 or 15, but it's been too early to really say what's going to work. But I did Figma, Clubhouse, House, the Aperitif brand, Circle, this new creator community thing, Squad, but just a bunch of small ones that are just so early to really know if they're going to work or not. But I had some sort of some track record and some interest in really learning about this kind of space, because it's fundamentally important. Like if you're interested in startups, like a lot of the startups do raise capital, they do raise money from VCs and angels, and there aren't that many people who are those people, and so you can be a meaningful part of business creation engine, if you participate in that. And so that's kind of how I thought about it. And then I did, after the George Floyd stuff, there was that meme going around about hire or wire, and I was like, I can do these, I can hire people, and I did, and will continue to do so, and I can also write checks. And so I just tweeted out, this is the power of Twitter. I just tweeted out, hey, I've done some of these investments, I'm looking for more, I'd love to invest in Black founders. And I did 4 deals from that and 2 others since indirectly. And basically I just ran out of money. I don't have picture stock. I still pay myself a salary. I haven't sort of exited any liquidity on the Gumroad stock side. So it's not like I have a ton of money. But I did a few deals, and some of them were looking for more money. So I emailed a few friends, including Naval. I was like, hey, I did a couple deals. Do you want to co-invest in these? They're looking for more money. And he effectively just says, I'd love to just give you money, and then you can just choose where you want to invest it, and I'll pay you to do that and help you sort of advise you on that. So let me know if you're interested. We have this new product at AngelList called Rolling Funds, sort of lowers the barrier of entry as a fund manager. You can sort of try it out, ping a few friends. I'll anchor you. You can start at $100,000 a quarter, do a couple deals a quarter, and then, see how it goes. And you can use Twitter, you can do whatever you want, because it's kind of this new model. It's a little different than how it's been done in the past. And I was like, oh, this is interesting. I'm not going to be a full-time VC. I don't want to deal with any of that stuff, and I don't have the time. I don't want to go on this road show for months, or Zoom show now. And but I can send some emails and these things, right? So I talked to AngelList, set up a little rolling fund, and put together a brief memo on Notion that just sort of my track record, who I am, what I'm interested in, my little fund strategy, and just sent it out to 50 or 100 people. Did a webinar about it. A couple tweets, and now I have over $1 million a quarter committed. So it's a sizable fund. It'll be a $4 million a year fund or something like that, which, if you have a normal fund with all these different things, that's sort of the equivalent of a $12 million, $20 million fund, depending on how much you allocate for follow-ons and XYZ.
Walk us through the math. I know you've done the math in terms of how that works, but walk us through if you raised a $40 million fund previously, like we were talking earlier. Walk through the math of how that works. Yeah,
I was kind of mind blown, because even though I'd raised money from VCs and things and been an angel, I never really knew what are the economics of a VC, right? And so I was $40 million fund. That is, first of all, you're not investing the $40 million. You typically take a 2% management fee over 10 years, so that's 20% gone. So you're really investing $32 million. Then typically half of that, or 2/3 of that, is often reserved for follow-on capital for this sort of the first rounds of these companies, their second and third, et cetera, rounds. Typically it's pretty common at 1 to 1 or 1 to 2 ratio. So let's be conservative. So let's say 1 to 1. So that's half the capital. So 16 million is going into early stage first rounds of these companies. And then that's over many years often, right? So that might be over 3 years typically, right? 3 to 5 years or something like that for a fund of that size. So really that $16 million is split over 3 years. It's around $5 million a year, right? So this $40 million fund that I see this big announcement, I'm like, wow, I would never do that. That's insanely massive. And like, they're probably so wealthy and making all this money and they can do all these deals, and I'm like, wait, that's like $5.5 million bucks or 5.333 million a year into new companies. Like that's a very different, like 5 to 40. That's a huge difference. Right. And so I just started doing the math and I was like, wow, like I can, with the rolling fund, which like dramatically makes it easier for me to do this. And because of Twitter and the sort of direct to sort of invest LP kind of relationship I can have with everybody, because that's kind of my shtick. Like I can raise a fund that's, probably on the size of a lot of these early stage funds, but it's part-time for me. And I don't have any overhead, right? 100% of my management fee, I'm just putting back into the fund as LP capital. So, of the 4.4 or whatever I'm at now per year, like, basically besides AngelList's fees, that's all going to go to companies. So over $4 million would go straight to the companies. And that's it, right? Like it just keeps the model incredibly simple. You don't have to do any math on like any costs to the fund in terms of like dinners or employees or associates or an office space or any of that stuff. Like I don't need any of that, right? Like all I need is some money goes into an AngelList bank account, and then I talk to companies and say, hey, can I give you money? And then if they say yes, I just, do a CC and then the deal gets done. And I think that is going to be really interesting over the next few years, like kind of being early to that same idea. I just like, when I discovered this and I talked to Naval about it, I was like, this is really interesting. And like, I totally imagine in 5 years, there are going to be hundreds of these people like what I'm doing now who are having these rolling funds, able to collect, commits on a quarterly basis, able to do it publicly, raise anytime, raise anywhere. And like, I wonder what that does to like the sort of traditional Sandhill Road. Clearly Sandhill Road's out of commission right now with COVID, right? But like, I wonder if like, this is just the end of it, right? Like, why would you need to, if you can just raise from all these people, you can do it over Zoom. No founder wants to raise money, right? Like even if you want to go down the VC route, it's a necessary evil still, right? And so I just think if you can get coalitions of these founders, operators, people who actually understand sort of what it is to be a founder or have some domain expertise, I just think that the sort of the career VC, again, like it's a curve. It's not like a binary instance. It's on its way out. It's been on its way out for a long time. You saw this with syndicates. You saw this with super angels. You saw this now with rolling funds. My guess is over time, the sort of traditional partnership model is going to go away. And you see it in politics, right? Like I think politics is a really interesting analogy because you have Bernie Sanders and Trump who basically can raise directly from people. They don't have, their teams are tiny. They have incredibly low overhead. They're super scalable. And they can use it as a marketing thing. Like I don't have to do super PACs. I don't have to have dinners with rich people behind closed doors every 2 years, which is what VCs do, right? Like that's what VCs have, this like 2-year fundraising kind of process. They talk to all these rich people, that I still don't know most of their names. Like people have been like, oh, you should, and I'm like, oh, cool. I didn't even know that there are all these people out here. A lot of them, they're like family offices. A lot of them are in like China. Like the money, it's not as like sort of like a bunch of tech people giving other tech people money. There's a lot more happening that I've sort of started learning about. But a lot of them have access rights. So like if some family office writes you a $10 million check into your fund to anchor you, like you're gonna have to give them updates, right? You're going to have to kind of give them some things, have a call with them once a month, which is actually not that dissimilar probably from politics, right? Like there's probably some soft commitment that if you bundle and you get, you give the, Clinton campaign or the Biden campaign or the Trump campaign or whatever, like $1 million, they're going to pick up the phone call, right? And so there's like interesting to see that kind of play out. So my guess is just like in politics, you're going to see way more AOCs, way more Bernies, way more Trumps, right? I don't know if that's good or bad, like not a statement on that, it's just going to happen. Like that's what I believe. And that's the beauty of democracy. And like, that you're just going to get, people want democracy and they're going to get it, right? Inevitably. Uh, and, uh, and I think the same thing will happen on the venture side, which, by the way, I think this whole conversation about diversity and inclusion, like a lot of founders, they raise from VCs, these VCs raise from LPs, these LPs look very, there's a path, right? That cuts through Harvard and Stanford. And I think if you can have all of these fund managers from all over the place, from all different backgrounds and all levels of domain expertise, all having these small funds, like, that's just better for everybody. There's like more diverse LPs, more diverse founders, more diverse GPs, more diverse employees. Like I see this all the time. Like I'm a dude. I like started a company, and like people will like women will be like, it's weird that like this company I worked at like did this or didn't do that, and I was like, holy crap, I had no idea. I didn't even know that's a thing that women would want or not want or whatever. I just had so little context for it. Like tampons in the bathroom, like it's so cool, and I'm like, oh shit, that's a great idea. Like I wouldn't have thought of that. Obviously, I was 21 at the time, a little different life experience now, so I know some of these things. But I just think it's so much better to just give people money to go solve the problems that they already know about than try to spend all this time, trying to like learn about this thing. It's like, no, I'd just rather give you money and you can go solve it, right? And I think the same thing with this sort of like the venture capital kind of community is like all these funds are trying to do all these things, but I really think the answer is to just like give people a bunch of money and then like they'll do it. They'll do a great job. They'll do a better job than you reading 10 books and a bunch of blog posts and then trying to solve the problem. Like that you just don't know. It's like I can talk about Indian culture. I've never lived in India, but like I just know it because I've just grew up in that sort of environment, right? And just it doesn't matter how awesome you are, and like unless you have like a master's degree, you're just not going to know as much as I do because of all the little things I picked up. And it's kind of like that, right? And so I just believe so much in like a bunch of diverse LPs picking a bunch of diverse GPs, and those GPs picking a bunch of diverse founders, and those founders building companies that are just better at all of these other things, solving all of these different problems. And I'm super excited about it because I do think it's going to be like a really interesting trend that's going to lead to a lot of interesting companies in the next 5 to 10 years.
One of the most popular questions, and these two are kind of related, that I got when I asked for questions to talk to you about was sitting in the investor seat now, how you think about product market fit and evaluating that, right, as an investor versus an operator. And let's start there, and then we can get into, there's another question about community building versus product development. But just in the investor seat, how do you think about product market fit, maybe either similarly or differently than you would as an operator?
Yeah, I mean, I really think about product market fit. There's sort of two distinct businesses people typically build. There's like B2B businesses and B2C businesses, right? And I think like I have much more context on the B2C side, even though Gumroad is kind of a B2B-ish company. The creator economy kind of is a little bit murky in the middle. But the way I think about it is, do people use this? That's sort of number one. And then do these people share it with other people, right? B2B, it's even simpler. It's like, do these people pay for your service? And it's surprising to me how little, how easy it feels like it should be to get to that, but then how hard it actually is in practice. And so I think I'm hopefully going to have a superpower. Like we were one of the first users of Stripe, first 100 users or something like that. And that's sort of with a bunch of different startups, just because we were an early tech company. So we constantly use stuff, right? Like Figma and Notion and Slack, all of these kind of things, because we needed to solve problems, right? And so I hope to have like a really good kind of insight into, one, picking the right people, because I can see, oh, they're going to solve this problem. Because as someone who needs this problem solved, like I'm waiting with my credit card here, right? And if I don't have that inclination, I'm not going to invest. It's like I'm either going to be a customer and an investor or neither, right? Sort of no conflict, no interest. So that's, I think, a big one on the B2B side. I think on the B2C side, I think people really, like I saw this at Pinterest. I really believe in Clubhouse. I think that's going to work. And the reason is like you get a sense of like the way that the sort of behavior pattern of someone who uses this product, and the fact that they want all of their friends on it right now. And not only do they want that, but they're actually going to go do it, right? Like there are all these decks and all these things I get that are like, oh, we have these metrics and this and that. But like, it's just clear that like they don't really have like that profound, like, I need to get my friend on this platform. And like, I think people don't realize how hard that is, in the sense that like when they see it in a little, a couple instances of that, they put it in their deck and they put it like a testimonial, and they think that's what it is. But really it's like, literally, it's like coronavirus. Like everyone that gets it gives it to somebody else kind of thing, right? Like that's what virality, virus, right? Like is. And so like Pinterest, I saw that we had 17,000 users doing 60 million page views a month. Like just the engagement was insane. I saw that at Instagram when they launched. I see that with Clubhouse now, where it's like everyone that joins is like, I know immediately who to bring on next. And I think nothing reaches scale without that, especially on the consumer side, right? Because like, otherwise you're spending money to grow, right? And so you're just not going to get to billions of people without, 100 million people telling, 900 million people, and the 10 million telling the 90 million, and then the 1 million telling the 9 million, et cetera, et cetera, et cetera, right? And so I hope to have like pretty good intuition, both on the consumer side and on the B2B side. And I can also help them, right? Because as Gumroad, I can literally pay for the service, integrate them, and say, look, this is not where it needs to be. Like if I was, like, I'm going to cancel, or I'm not going to pay for this. I think that's good. Like I really believe in Notion. I think Notion will be a $20 billion company someday, because it's so essential to Gumroad. That's it. Like I have no idea anything about the company, but like the one more thing, like I don't think people understand. Like if I use a product, like let's say it's the Gumroad CEO, I find a product online because I have a problem. I Google for it. I go to their homepage. I read their thing. I sign up. I integrate it, like which requires writing some code, like putting that in, into our sort of security process, getting that deployed, making sure it works, getting all that code peer reviewed before that, and then paying for it, right? And getting value out of it enough that I'm continuing to pay for it. That is an insanely hard thing to do. And which means it's an insanely high signal. Like every time that happens, I'm going to email the company and be like, hey, can I put $250K into this company? Right? Because it's so rare, and it's also so indicative. Because it's so rare, the companies that get there, it means you basically solved the problem so well, and the problem was so it needed to be solved so badly that I just went through that whole funnel, right? But without talking to a single human being, which I think is like an incredibly good signal for a company. If you can do that, right? Like I should have, when I started using Stripe and like I accepted my first payment on Stripe, I should have been like, can I please give you $10,000? Because I didn't realize at that time like how significant it was, because as a user, that's all I was doing. Because obviously if I didn't use the service, I didn't use the service. So every service I used, I had to go through that flow to kind of do it. But like I used Twilio, I used Stripe, I used SendGrid. Like these were, at the time, these were all worth, low hundreds of millions, if that, in valuation, right? And so I'm hopeful that like just being in the game is going to give you insights. Like when I meet with certain people, like, they're like, it was obvious. Like we had the internal numbers, we were in the thing, like Pinterest was obvious. And I just think VC is when you operate at this like distant level, you just don't know. You're like looking at different things. You're looking at like how beautiful the homepage is, or like how awesome the team is, or like the name and the domain, and like these other signals, like their Twitter follower account, and like the quality of the content. Like it's like a peer reviewed, it's like an academic view of it, right? It's like people being like, oh, this isn't interesting because Donald Trump isn't like a career politician and has this and doesn't do this. So obviously he's not going to win. But that's like the wrong view, because the right view is, what does the market want? The market doesn't give a crap about any of this other stuff. Like you could have typos all over the homepage. You could have a thing that's laggy. It doesn't work in Internet Explorer. All these things that developers might be up on you about. But it's like, well, people are paying for it. People need it badly, right? Like OnlyFans is like a terrible product, but it's growing like crazy. It will probably be the largest company in this whole space because there's a need for that kind of thing, especially right now with COVID and people needing to make money. And like, it's not that great of a product. And guess what? It doesn't even need to be. They will probably be, processing hundreds of millions, billions of dollars a year pretty soon. And that's, I think, the takeaway from that blog post, right? There was that line that went viral, which is, it doesn't matter how amazing your team is or how fast you ship features, the market you're in is going to determine most of your growth, which I still believe. And I think it really resonated, because there are all these people who built these phenomenal products and it was like not enough. And then there are all these people who honestly built terrible products. And Twitter is a great example of this, right? Like Twitter has succeeded despite itself, in my opinion. Like, I feel like they made so many mistakes, so many blunders. The fail whale, they were down all the time. They still don't have like certain functionality that people expect. But the truth is, the market needs it. It's just so valuable to people that, you know, it's going to succeed. It's going to succeed in despite of all of its failings. And then you have I know plenty of companies that are phenomenal teams, phenomenal products, like just beautiful, and then no one uses them, right? Because the market didn't care. And so I think it's just like really being diligent about like, does the market really want this problem solved? And the answer is often like, no. The market works, right? This is kind of the Lindy thing. It's working. Everyone's living. Like, coronavirus has also not like stopped people from doing what they like to do. People are just going to do what they do, and so they're pretty happy with what the current state of the world is, right? They're living in it. They're not maybe looking all day long for like new software to use, right? And so I think people underestimate like how hard it is to reach product market fit, and then also how once you reach it, literally like nothing else really matters. Like, at that point, you're just scaling, right?
So this gets at this question of like community development versus product development, right?
Yeah.
And I think that there's a bare bones like set of quality that you have to have on the product side. Like, the product has to quote unquote work. It might not doesn't have to be perfect, but it's got to work and be functional. But Twitter's, one example. There's many others of like, part of Twitter's magic is the product and how it works. But then there's the community side, and it's the people who are there and the content they're sharing, and kind of all of the non-product features to it. How do you think about that balance, especially in the earliest stages of a business? And just kind of, when do you optimize for the product building versus more of like the community or the non-product type features that end up pulling people in and holding them there and making it valuable for somebody?
Yeah, I mean, I think that's super essential, especially on the B2C side, because the truth is, you can send someone a message on Slack, on Twitter, on WhatsApp, on Facebook Messenger, post on their wall. Like, there's like hundreds of ways if I wanted to send you a message, email you, etc. But each one has a different connotation, right? Like, it has a different meaning. It has like a different place in our society and our etiquette. And so I think that's why consumer is so difficult, is because people build the products. They're focused, it's like the Y Combinator, make something people want. And everyone obsesses about the something. Like, we got to make something awesome, but it's like the people, right? That's super key. And really figuring out, I think, who you're building for, who is going to benefit the most from this, right? Like, who is really has like the deep pain, like who's going to use this first because they need it solved so badly. And then the rest of the world will sort of slowly catch up over time. And figuring out like the demographics of that, right? And a community, I think, simply is just a group of people that have something in common, right? So if you find out what that group of people is, they will have something in common. They will be a community by default, right? Building for everybody is just not something anyone does, because just not, less than half the world speaks any language, right? So you're already starting with like a max of like 1 billion, 2 billion people or whatever, when you build the most broad platform ever. Like, Coke might have 4 billion customers or something, right? Ever. And nobody else does, right? No tech company does. So I think it's, I was on to Brett actually from First Round about this. He's like, so many startups, they don't even know who their customer is. They still, like, they know they've solved a problem. And then it's like, okay, who has this problem? And it's just like really difficult to, even Stripe in the early days, it's like, people were like, oh, this is for developers, right? But like Uber and Airbnb, they're not going to use Stripe. Like, they're going to use OffNet or like data, First Data, or like one of these core things. And like Square, right? Square was like, we're for farmers markets, and like, like you just, no one knows. Like, you think you know the right people, but you just, you don't really, it takes a long time to really figure. I mean, Shopify, right? They were a public company at $1 billion. And it's like, oh, this is for snowboards and like, like selling this kind of stuff. And then like, tens of millions, hundreds of millions in GMV businesses are now on Shopify. And it does, I mean, Shopify could probably power Macy's at this point, right? And probably will in like 5 years. And so I think people like sort of don't really have a clear view of who the right customer is. And I think Pinterest, we did that really well with like sort of Midwestern moms and things like that. Ben was really savvy about figuring that out. I think Clubhouse has done a really good job of like kind of sort of like build it. Yeah, it sucks if you're not part of it, but like they're really just careful about growing the community over time. Because I do think it matters. I do think people think, oh, you can just solve the problem and then it's great. But it's like, no, you need to know. If Twitter needed to know it's for this group of people in the early days. Substack needs to know it's for this group of people in the early days. Um, and it's also like an overhead problem too, right? Because if you don't get the right people, even though they could use it, you now have to train all these new people. They use it very differently. They're affecting the norms in this way. There's like a cultural inertia that builds up, and you want to make sure that that is going in the right direction before you onboard all these people. Otherwise, they're gonna shift it into this other thing that you really don't want, right? Like Patreon, for example, they see OnlyFans, they see the crazy growth, and they've made a conscious decision saying we don't want to go that route. We don't, that's not what we want. And Patreon is big enough that they can kind of do that. But if, Patreon just got started and it just became the default for this kind of thing, like they wouldn't be able to stop it, right? If that makes sense. Like there's sort of like the parasite becomes the host kind of thing, right? Like you want to maintain that. But yeah, that's kind of how I think about it. And I do think, like to your point, there's this interesting shift you can now do that wasn't really possible 5 to 10 years ago, which is you can actually build an audience before you have a product. And that's super fascinating to me because you can actually really figure out who cares about you, who are your super fans, what problems do they have, and then they already know, like, yeah, I'm waiting for him to build it. Like, this is the right person to build the thing. We're all waiting for them to build the thing. It's even like this venture firm I'm doing, right? Like, it kind of came out of nowhere, but I think it's because I built a community of followers and founders and other investors and designers and engineers and writers who, a lot of them followed me because of this journey that I went through. They want to kind of go through a similar thing. And like a big part of that journey might be for some people, certainly not all or even most, but for them, some of them, it's like, I need some money to get started. And so now I can go do that. I can kind of, I think my fund might be a great example of like a community first kind of business or product, right? Like I didn't go out, I wasn't like, I need to be a VC. I want to be a VC, right? It was like, oh, there are all these people that I want to give money to. And there are all these people who want to give money to people but they don't know. They don't know who these people are. Like, and I can go connect that. I can connect. I'm like a one-man marketplace effectively. Right. And so, yeah, no, I think it's and really that's a lot of consumer products. Like they're really marketplaces, right? They're like creators and consumers, and you're trying to kind of connect them to each other.
I want to switch gears and talk a little bit about crypto and Bitcoin. What are your thoughts there? You told a amazing story earlier of a random person at Airbnb named Brian who ended up being the founder of Coinbase, reaching out to you. But what's kind of been your journey with Bitcoin and crypto, and kind of where do you sit with it now?
Yeah, I bought a bunch, not that early, unfortunately, but I have some. I think I really do believe that crypto will change everything. I just think it's like, who knows when, right? It's kind of like that kind of tinkering thing. Like clearly at least to me, it seems whenever you have that many smart people interested in something, it's really an inevitability. It's like a bunch of people thinking about food science or any of these things. It's like, it's going to happen. Like clearly there's something here, climate change, et cetera. Like there's like something within smart people that's kind of driving them to this area. And I just don't know when. Yeah, I mean, I think the difficulty with something like crypto is it's so fundamental. Like you kind of have to rebuild everything in crypto in this new model because it's like when Gumroad went from like the VC back to the non. I had to go down to zero. You have to kind of like build like new nation states and new cities and new sort of economic infrastructure and new regulations and new everything effectively to kind of a new police force that, like all of these things have to be thought of in a very different way. And I think it's inevitable. Like I really believe like anything that looks the same pre-internet and post-internet is not going to look the same for much longer, right? Like the internet software is eating the world. It's sort of like going to change everything that it touches eventually because it's just so fundamental as an innovation, as an invention. And I mean, like I can look outside my window and like everything looks roughly the same as it looked 40 years ago. There's like roads and there's fences and there's cars with 4 wheels and there's a pool and there's, buildings or whatever and like telephone poles, right? And like, that's not going to be the view outside my window 50 years from now, right? There's going to be like drones flying around and like weird looking car things and like I don't know, who knows, like I'm sure a lot of this stuff is just going to go away. Like there might not be roads. We might just, who knows? I don't know. But my guess is that all of this stuff is going to change. And in a world, like going back to that liquidity thing, I just think increased liquidity is so important. And I think what crypto does is it just massively increases liquidity because it allows everyone to become a financial player and that sort of to transact directly all the time. Uh, and I think, people always talk about like taxes, like taxation is theft or whatever, right? And like, but if you think about it, like a huge amount of America is sort of credit card based, and every credit card transaction has roughly 2 to 3% tacked onto it, right? And so that's a 2 to 3% tax that like effectively all of us are paying every time we use Postmates or Uber, which by the way, like is a much larger percentage of our economy than it's ever been. And so I just think like clearly that's a middleman that will go away eventually. Like it's just an inevitability to me that will, that will go away. I mean, someone who runs Gumroad, I mean, I see it. I'm like, yeah, obviously there's going to be a future where, you can go to any website and pay the person directly. Like you wouldn't even pay Gumroad, right? You would pay the creator directly, and then Gumroad, because we're facilitating it, there'd be a sort of a smart contract or something that would allow us to get this, this kind of thing, some percent or whatever. It's just inevitable. Like I think in the future, Gumroad won't even need to exist, because like it will become so liquid that even the middleman that we disintermediated, we will be a middleman that gets disintermediated. Like that's inevitable to me. And that's great. That's a good thing. I'm not attached. I don't need to be like, if we can solve the problem to a point where we don't need to exist, like that's awesome. Right. Like that would be great for me.
And help me understand how you guys have thought about that in terms of like take Bitcoin for example.
Yeah.
Accept Bitcoin, don't accept Bitcoin. Have you tried it before? Just stick to
Yeah.
dollars. Like how has that been?
Yeah, we currently just stick to dollars. I think the biggest issue we have with supporting Bitcoin is everyone that wants Bitcoin wants to get paid in Bitcoin. That's the issue that we have. Is like we get creators all day long that are like, hey, we want crypto. And I'm like, all you got to do is find me 5 people that want to pay in Bitcoin and I'll build it. Because the truth is everyone wants it. No one wants to give it, right? And so I think that's sort of like, the problem with Bitcoin is it is so interesting and it's sort of an investment vehicle, right? For folks that like, it's not like USD or something and I know there's sort of like USD coins and stuff like that I think are interesting too. But I think that's sort of like the fundamental issue is that people, there's this like supply demand problem where everyone wants it. No one wants to give it to anybody else. No one wants to be the person who bought a pizza for, 1 Bitcoin or 50 Bitcoin or whatever it was. And so I think there's that sort of risk aversion that everyone is kind of very fearful of. So, I mean, it might not even be Bitcoin. It might be like a new fork or something like that kind of, solves some of these other problems. But I still believe it's inevitable, right? And that might require like the browsers that we used to be different and like, but it seems, yeah, what I tell people is like when my mom wants to pay with Bitcoin, I'm sold, right? Like the minute, again, like the market wants what it wants. And the minute the market wants to pay with Bitcoin, like we'll support it, the next day. And my guess is we'll support Apple Pay and other things that we won't even have to think about it eventually, that like it just is handled by Stripe or Apple or whatever. And it's just a part of the nature of doing business. And I'm just really fascinated. Like I actually think one of the things, this is like kind of a tangent, but one of the things I'm really interested in with self-driving cars is the sort of the nexus problem, right? Which is basically if everyone has self-driving cars, my guess is people are going to be a lot more mobile and going to move around a lot more. Like for example, if you're an NBA player, you basically have to file taxes in like 50 states or whatever, right? Because you're sort of making revenue and doing your job in all these different places. And there's people that just like do this for NBA players, right? And every sort of athlete. And eventually, if with self-driving cars and this sort of like other future, this new future, like that's going to happen. That's going to happen to a lot more people, and you're going to have to start collecting taxes. Like right now, for example, you can get a bunch of stock in California, working in California, and then you can like move to Florida, and then the company IPOs, and you pay no taxes to Florida, right, or whatever. And so like that's an inefficiency in the market that will eventually get resolved. And my guess is that like one of the accelerants to that is going to be all these people moving around all the time, and a lot of these transactions are going to have to be kind of like at point of sale, right? Where it's like, where were you at the time? And the way that, that sort of tax and all these things are collected, that's all visible on that transaction. It's not per transaction amount. It's not like once a year you pay your taxes kind of thing. I believe at some point that will be the future we live in. And the really interesting thing about that is then you can unbundle the government, right? Because you can actually see like, oh, it's not just like all this money going into like this account and then the Fed kind of decides what they want to do with it. It's really like, oh, you paid for coffee at this place. This much goes to the city. This much goes to the county. This much goes to to the Fed, or not even the Fed directly, but it goes directly into, the military, or like, Department of Homeland Security, or whatever it is. And then people should be able to see that, right? Because I think people don't have a problem paying taxes. It's just like when you walk down the road and you see a bunch of construction and you have no idea what the hell's going on. It's like that opaqueness that I think irritates people. If people were like, oh, this is cool. This is like what the government, like what I get for this money. Great, right? I think it would be great. But I think, yeah, that whole crypto it feels to me like a fundamental importance. Like I was reading this book about the genome, and like the sort of bodies are kind of a decentralized, they feel centralized, but like they're sort of this decentralized, like bottoms up approach to solving problems that has taken billions of years, right? And they're very efficient. Like decentralized bottoms up sort of organisms or companies or whatever are much better at solving problems because they're sort of anti-fragile. Like the head can get cut off and these other things can keep going. And you don't have this problem where you have someone who sort of builds power over time and sort of like is trying, is sort of in service of themselves instead of the whole organism, et cetera, right? And so I just really believe that humanity in the future, if we want to get to whatever the paragon of civilization is, it will be decentralized, right? It's like the fundamental problem with communism is you have to have someone who enforces equality, right? Like that's a kind of oxymoronic. And the only way you can really do that is by literally never giving anyone that much power. It has to just be built into the model that like no one can do certain things, in my opinion. And I'm sure there are experts, and I'm getting a lot of this wrong, and I don't really know what I'm talking about. But like that idea is really interesting to me, that sort of decentralized, bottoms up sort of, and the internet's going to allow for that, right? Because like before you kind of needed the bundling because you needed the economies of scale to kind of solve certain problems at a certain scale. But if you can really increase the liquidity and the transparency and everyone can see everything, I just think just like you can have a startup that solves a problem with 5 people or 1 person instead of 100 or 200, right? Because you don't have to give DVDs and deal with shipping, fulfillment, and like all of these things are just handled by other people. And those people make more money than they would if they were working at your own company. That's kind of like firm, outside insider firm thing. It's just going to be better. It's just like going to lead to a much more efficient sort of systems of governance. Everyone's going to be safer. Like I just think ultimately, like a decentralized something is going to be better than the decentralized version of it, right? Just like the internet is better than like your local library or something like that, right? Like you're getting billions of people to curate for you instead of like 3, right?
I think that you're more right than wrong, right? I mean, all the details are where the nuance is, but for sure, yeah. I think that you're more right than wrong. Before I get into the rapid fire set of questions, somebody asked, what is some popular advice that you hear often that you think is wrong or it sucks? Like what is the advice that gets shared all the time and you think people maybe shouldn't actually listen to it, or it's misleading?
Yeah, I think it's ironic because I feel like I helped contribute to this, but there's this like make a living doing what you love, right? There's this a creator economy. I think Gumroad, we kind of invented the term make a living doing what you love. Not that that really means anything, but I think there's this idea that like you should only pursue the things that you love and are passionate about. Like Naval says, like find the thing that you do endlessly, effortlessly, or whatever. And I think there are things like that for some people, but there are a lot of things that I think I'm really good at and I love doing. But it's like it's like cause and effect switched. It's like I am really good at doing it, which is why I love doing it. But there was a period of time where I wasn't good at it, and I kind of pushed through, and it became good at it, and then started like I love the idea of it, and I knew that if I got good enough at it, I would just love it entirely. If that makes sense, right? Like there's just like growth is uncomfortable, right? Like your body doesn't like to expend energy it doesn't need to expend, right? Sort of like survival of the fittest or whatever, right? Like it's sort of a defense mechanism, and just in case. And I think the same thing with a lot of these. Like you don't need to learn how to paint. You don't need to learn these skills to survive. And so I think it does hurt. And so I think there's like sometimes this rhetoric, especially because the successful people often are the ones that say it all the time, right? Like, or like, no, you should only do what you love and only work this much, and like you should prioritize your family and your friends, and ultimately there is like a sort of a two marshmallow kind of thing, right? Like ultimately you do probably want to work a little bit harder than most people do if you want to get to some point, and you might not like doing a lot of the things, right? Like I think being a solo founder was like the best thing ever because I had to learn everything. Like starting this fund, yeah, there's like a lot of weird stuff that I don't care about, but like I learned those things, and those things inherently, because they're annoying and to learn, like very few people learn them. And so like I can talk about this kind of fun stuff and like teach people and gain an audience from doing that, and founders like me for doing that, and they might want to let me onto their cap table because of that. And so I just think it's like it's sort of beneficial. But yeah, there's just like this rhetoric, I think, that like you need to love all the bits of it, like writing. No, dude, like writing sucks sometimes, man. Like I'll stare at this thing and be like, I don't want to do this. I don't like doing it. But then I post something and it does really well and everyone loves it and it feels amazing. And the worry I have is that people think that is like that was like a labor, like just love. It was just like, oh, I love, it's like, no, it's like brutal, like working through this thing, outlining it, re-editing it. Like they don't see the 7, 8, 9 drafts of like, oh, this didn't work. It wasn't effortless at all, actually, for me, right? Like it was brutally difficult, and it got better, and I could see, and I had the confidence because I'd done it before that I would get through it eventually. But yeah, I just think there's that kind of like that advice that people share because it sounds good, but it's like, no, sometimes you just need to spend a couple years, being bad.
I think that's fair. 2 questions, and then you get to ask me one to wrap up. The first is, what is the most important book that you've ever read?
I really liked How to Win Friends and Influence People, which has a terrible title, but I loved that book. Maybe it's just because I was not a good person like before I read that book or something. And some people are like, this is all obvious. I was like, damn, my bad. But I really like that book. I think it really helped me think about like other people in my conversations. It's so easy to you have a different person. It's like when you hear yourself talk, right? Like you realize like, oh my gosh, like I'm a very different person. Like I'm inverted. Like there are all these things about the way other people sort of like interface with me that I've never thought about. And that book really like helped me think about like, oh wow, like I'm just like an NPC in somebody else's story, right? Like they don't think about me like I know all these things going around in my head and sort of my environment. And it just really made me aware that like I really don't matter to anybody else. Like I'm like a little person that gives them a quest or gives them some money or whatever, but they care about them, right? And maybe a couple other people, but their family or something like that. So that book I think really helped me kind of like sort of like get humble, I guess, about it and be like, no, my job is to like provide value and then like go on my way, and I don't have to like pretend that it's some grand relationship that we have. It's been really freeing.
It's one of the best books in the world and most popular for a reason, for sure. Aliens, believer or non-believer?
I am definitely a believer.
Why?
Yeah. You'd have to be so cocky to think that that there's only one planet and we got lucky. It's like when you win the lottery or something. It's just like, no, like there's probably, my guess is that there are a lot of them. They might be really far away. But man, I just want to be hopeful, man. Like I imagine that, like thinking about the sort of the crazy future, right? Like like there was a time where like we were discovering new human beings on Earth. Like how crazy would that be to like just be like, holy crap, there's like a whole group of people here that are like us that we like, but in other ways are totally not and speak a different language and all these things. And like, my guess is how cool would it be to have that happen on an interstellar level, right? Like at some point in the future to like, and that would be freaking scary. I mean, I can't imagine like how nerve-wracking that would be for both, like if we get there, but like, I don't know, I'm hopeful for that happening at some point in the future.
It would be amazing. I feel like we need to start thinking about, is it, are we going to discover the aliens or the aliens going to discover us now? You get asked me one question to finish up. What do you got for me?
Yeah, I mean, how do you think about, I mean, you do so many different types of content, which is awesome. Like, how do you, like, have you thought about like what's next in terms of like the type of content and like how you, yeah, like how do you think about exploring, new mediums and things like that, especially with COVID and like,
Yeah, I think that there's like major inflection points. So like audio was one, right? There's kind of this resurgence on video. You see Spotify adding like video podcasts, which is really just a video.
yeah,
YouTube's kind of popular. You get the TikToks and things like that. So the major ones I think are what people really focus on because they're the easy ones to see. But the micro kind of evolutions, if you will, in content, I think are much more interesting. And actually, that's where a lot of the value gets captured. So if you think about in written form right now, like you've got Eric Stromberg doing these like screenshot essays, right? And then Patrick O'Shaughnessy with Invest Like the Best, like they've now incorporated it and they're calling them business cards, right? But there's just this idea of like, hey, wait a second, there's something between a tweet and like a blog post, and it literally fits all on the screen of an iPhone, right? And like that's a pretty interesting like nuanced thing. If you look at audio, you could say all of the podcasts and like that whole rise. Well, Clubhouse is kind of like a micro kind of live drop-in version of really kind of a podcast and conference call kind of mixed together or whatever. And so as you kind of go through the micro pieces of these types of content, it just feels like that's where a lot of the value gets captured. What I think is much harder to understand is when it relates to content, like where are the platforms that are going to accrue a lot of the value versus kind of the non-venture backable type just content providers, right? So the screenshot essays, not really a venture backable type business, but if there was a platform that then aggregated them all and created a marketplace and a follow graph and what I mean, like, okay, like there's something else there. And so I think that you got to see the micro evolution happen in a certain type of media format and then really look for like the platform type companies. But at the end of the day, like I think you and I see very kind of eye to eye on, I call them personal media companies where people just build these massive audiences, maybe multi-platform or may not be. And then they're going to go and they're going to create products, right? And whether that's a physical product, like you see, kind of YouTube stars selling merchandise, or you see people actually creating software, or you see the Kim Kardashians and Kylie Jenner's creating makeup, like they're going to sell products through that audience. And as they do that, I think you're going to see really, really valuable companies get built over time.
yeah. How do you think about GPT-3, to throw another question in?
So I'm not technical, right? And so in kind of at a high level, like it looks like magic. As you kind of unpack more and more of kind of the use cases, and you see everything from the learn from anyone or the Figma design, all these kind of applications we've all seen flying around on Twitter. It feels like we're teetering on the edge of being able to use this stuff in production for real products built on top of it, but we're not quite there yet. Like we're really, really damn close. And I think that's why everyone's kind of like leaning in and excited about it. The other piece of it, to me, that's really interesting is, can you basically start to use it to put it in people's hands so they can start using it for things you and I can't imagine, right? So already, like I've seen 5 or 6 demos online or prototypes where I'm like, I would have never thought of that,
Yeah.
right? And so it's like, you kind of talked about it earlier. It's just like, we don't know what it becomes. And so just like get it in as many different types of people's hands as possible. And like, just let them like go to work. Right. And then you and I will turn around and be like, whoa, did you see this? Or did you see that? And we'll be like, damn, that was pretty cool. And that's how I think real innovation and value gets created.
Awesome. Yeah, I agree. I have no idea. I see it. I'm like, this is crazy. I would love to integrate it into Gumroad somehow. I don't know what it looks like, but yeah, it's going to be like obvious, like a year from now. It's like, oh, of course,
Absolutely. Where can we send people to find you online, learn more about Gumroad or the investing side?
Yeah, I mean, follow me on Twitter. That's the best place, at SHL. I also have a Gumroad newsletter, gumroad.com/Sahil, where I kind of write once a month about just like all the random stuff, Gumroad, the fund, other things in my life. Yeah, those are sort of the two best places to find me.
Awesome, man. Well, listen, We went almost 2 hours. You're a legend. We are definitely going to have to do this again. Thank you so much for your time.
Yeah, thanks for doing it, man.